You all right?
Yeah, all good. We will just. Who have we got? Right, Anthony. Nice one, mate. Right, I'm just going to crack on, Anthony, and we will smash this out. So, guys, if we have a Discord channel, of course, and just say to the lads, look, if anybody wants to jump on the live and go through this live with us, then they can, and they can ask any questions they like. We will smash this out as always. If you are a frequent user of the channel for fundamental weekly analysis, you know what to do. Trades, strong, weak, and neutral. Okay, that stands for a strong economy slash currency, a weak economy, and a neutral economy. Okay, and at the end of it, what you do is by using fundamental data, you gauge which economies are strong, which are weak, which are neutral, and at the end of it, you then pair up a strong economy with a weak economy to give you the highest probability of trade based on genuine data. All right. Excuse me. Now, there's going to be loads of information here today because uh, overall, the bigger picture, right, is still that the USD is a fucking powerhouse. However, you will see mountains and mountains of USD weakness right now, and you'll be like, well, why is that? Obviously, there are some weak numbers and blah blah blah. But overall, if it's still a powerhouse, then why, and Trump's in and everything's great, why is there still why does it look weak as piss right now against pound USD, euro USD, euro? Why is it flying as opposed to melting? Well, there's loads of kind of underlying reasons for that. It's not just about looking at what's on Forex Factory when it comes to fundamentals. There's loads of stuff that goes on around about the world that you also have to keep up to kind of speed with. So one of the reasons is there's loads to it, but one of the reasons is basically US debt is like 36.2 trillion or something crazy, and Trump only has a certain amount of time where he has to get that down. He has to get a monstrous amount of that paid, or the percentage that he has to pay back is just fucking phenomenal, and essentially they'll just never pay it back, right? So what he's trying to do is there's loads of different methods he can use. One of them is like melting the fucking stock market down. It's not a crash, it's just a major reversals. Then he lumps in, then they'll pull up and he will have all this free money essentially to go back and pay, debts. Exact same idea with Bitcoin. You hear that he's posting news about, yeah, I might do something with Bitcoin, and if you look right now, Bitcoin's melting. There's no coincidence. They're pulling it all back to get in it better value. Better is a value. You always hear me talk about it. They'll lump in, take it up, and it's like free money. If you think that sounds fucking crazy, then look at El Salvador. It's exactly what they done. It was one of the fucking poorest nations on the planet, riddled to the fucking teeth with crime and fucking cartels and those little M13 or what the fuck they're called, gangbangers. And now the streets are clean because the new El Salvador president literally fucking jailed every fucker who had a tattoo. If you walk down the street and you had a tattoo in your face, you were getting fucking jailed, right? And they're just never getting out. And on top of that, the country was in massive fucking debt. They put billions into Bitcoin, a couple of years ago. Now, it's one of the fucking wealthiest nations with zero debt. They have zero fucking debt because they've done it. And Trump is kind of trying to he's trying to fucking copy that lead as well and do stuff like that. So when you're seeing things like, oh my god, the US is crashing, it's not crashing. Everything is being done by design. It's pretty fucking genius, actually. But if you're kind of like, well, if the US is strong numbers, then why is it melting down? Because you can't just look at the numbers when it comes to fundamentals. You need to know about the whole fucking big picture, right? And that kind of stuff is what's making the market move also. So let's see what we have got. Now, as you know, I do these reviews using Forex Factory. Everyone's familiar with Forex Factory. I actually prefer to use this. Can I move that? Okay. I actually prefer to use this. I'm sorry it's cut off. Obviously didn't realise that when I made the screen a particular size. However, this is called Trading Economics. It's a million times better than Trading View. You get so much more information. For example, here, look, you've got Germany, right? 1, 2, 3, 4. If you've got 4 here, you probably look on Forex Factory and you might have like 2 pieces of information, so you get far more information here than what else you do. The reason why I don't choose it is because if I select countries here, look at how much of a pain in the arse it is to select the countries that I want to view, right? Whereas, if I come across to Forex Factory and I want to do a quick weekly review, I simply hit filter. Look how easy it is to turn on and off the major pairs, compared to fucking sifting through all of that, to turn on and off your major pairs and the things that you want to see. It's a massive pain in the dick. So I just simply use Forex Factory for that. All right. So I'm going to fly through it. It's getting late for it's 6:30 at night. I know it's not late, but I've been up since fucking 5 o'clock this morning running and stuff. Let's just fly through it, guys. So if you watch this each week, then you'll know what I do. If you're new to it, what I do is I cover each individual pair on its own, because look, if you look here, look, you've got NZD, AUD, Japanese yen, China, AUD, Euro, and look, it's just a big, massive clusterfuck, right? And trying to, go in and out, oh, which is that one? Oh, that's pound. Oh, that one's USD. It's just a fucking pain in the dick. You don't have to do that. You can make it much easier for yourself by doing these little moves. So, what I do is I go through each pair individually, each currency individually, sorry. However, when it comes to the initial one, I do 3 currencies at the same time, which is AUD, China, and NZD. The reason for that is that they are all very closely correlated. So if China does well, those two will potentially do well, and if China does bad, those two will then be looking to, go bad as well, okay? It's called positive correlation. Positive correlation is when one currency, one currency economy moves one way and another currency follows it, It's called positive correlation. Even if they're both coming down, it's still positive correlation because they move in sync with each other, right? It's like Bitcoin and Ethereum, they do the same thing. Negative correlation is when one country goes up, the other country will go down, and when one country comes down, the other country will go up, and that's called negative correlation because they move in opposites. An example of that would be USD and AUD. When USD is strong, AUD is generally going weak, and when USD is weak, AUD generally goes strong, okay? Obviously, you can't just take it black and white like that, but it's a rough explanation, okay? So let's move on. What date are we on here? 9th. Okay, so that was last week. Let's see what we have. So, we've got 3.1%. So this looks good for NZD, but remember, overall, the New Zealand economy is absolutely shit. So you don't just take one piece of good news and be like, oh, that's great. Let's, let's fucking buy it. No, absolutely not. But it just gives you a kind of an overview of what's happening. Is there any growth and so on? So that is good growth. I'm not knocking it. That is good growth in the trade index. EUD operating profits decent. Cakes and manufacturing is getting slightly better, and because it's above 50, what does that mean? That means it is bullish. Anything above 50 is bullish. Anything below 50, i.e. 49.9 downwards, is bearish. All right, it's dead simple. You don't need to complicate that. And you can see that previously it was 50.1. They forecast it to come in at 50.4, and it actually came in better than forecast, okay? So another thing I'm going to point out here, and we might even see an example of it when we go to different pairs. If this was the other way around, right, and let's say you have here the cakes and manufacturing, let's say over here the previous was 50.8, right? And then here, the actual, as in right now, the new number was 50.1. That is not bearish just because it got less. It shows that things are slowing down. It's like, things aren't looking so good, but it does not become bearish until it gets below 50, okay? If that was 50.8 and this was 50.1, it just means things are slowing down in the economy, so just keep that in mind, okay? Building consent. So why do we care about things like building consent? I mean, it's only a month for a month. We don't really care about this one right here, but why do we just have a quick look at building consents and building approvals? These are all good things. Why? Because if building approvals are going through, well, what's needed for that? You need bank loans, you need mortgages if it's housing, and so on and so forth. So if the bank are pumping out money into this, it means that the builders, it means that people are taking out loans, right, from the bank, whether it be a mortgage or a business loan or whatever, and then you are then paying the builders to carry out the work of building the properties and so on. So what is that doing essentially in very, very basic terms? It's stimulating the economy. So that's why we like to see it, okay? It means that there's even more people in a job. So if building approvals goes up, what does that mean? You're going to have more fucking tradesmen on jobs. If more tradesmen are on jobs, it means more tradesmen are getting salaries. If more earning wages, sorry, if more tradesmen are earning wages, what does that do? That means that more tradesmen are able to pay their mortgages. That means you can guess that, okay, less people are going to default on their mortgages. More people are going to be able to pay their cars. They're going to be able to pay their internet bills, their mobile phone tick, you know, and so on and so forth, gas and electricity. So that's why these things, like small things like building approvals, is actually quite a big deal. Okay, not massive, but it gives you good insight. All right. GDP quarter on quarter for AUD has increased slightly, so that's decent. It actually increased as forecast as well. Cakes and services PMI, it was 51.0, now it's 51.4. Fantastic, bullish, and it's growing. Now, if services are growing in China, why the fuck does that affect the USD? It's very, very simple. So, China, as we know, is a manufacturing country, right? Japan's a manufacturing country. Germany's a manufacturing country. The UK is a services country. France is a services country. New Zealand makes most of its money through dairy, believe it or not. You know, milk and fucking lamb shanks and all that. Australia is you all know, is mining. Of course, they do loads of stuff, but the main thing for Australia, how it really makes its money, is really the mines, right? So you're seeing fucking jobs for mines everywhere. They're asking people from the UK to go over, you know, all around the world to go and work in the mines, and there's big money to be made. Now, China, if China's services and manufacturing, well, not really services, but if China's manufacturing increases dramatically, it has a huge positive knock-on effect on the AUD. Why? Because if manufacturing goes up, it means they need more shit for the factory, right? They need more steel, nickel, tin, iron, gold, silver, you know, aluminium, whatever you can fucking name. They then need it to then start the production, the manufacturing. They buy about 80 to 90% of that from Australia. So when China's manufacturing goes up, it's like, oh, a little light bulb moment in your head. Okay, so if Australia's numbers are shit today, but the Chinese numbers are going up, that means potentially I should be looking to see AUD getting stronger over the next week, 2, 3, 4, 5, and so on, right? And it really is as common sense as that, guys. It honestly is. Let's have a look at what else we've got here. Good trades balance. So if you look at this here, this is a positive, right? The previous was 4.92 billion. The trades balance right now is 5.62 billion, which is an increase. So why is it red? Do not let Forex Factory fool you just because it's painted it red and you just look at it and see red, think, oh fuck, that must be bearish because it's red. Absolutely not. The reason why it's red is because if you look here, they forecasted it to come in at 5.85 billion and it came in less than forecast. So that's why they fucking made it red, okay? But don't be fooled if you look at the previous, which was the real. This is a guess number, right? This is a number that someone plucked out their arse. We estimate it's going to be this. So it's not real solid information. It just gives you a kind of insight, right? This here, the previous, is a real number. This is what the figure actually was. This here, the actual, hence it's called actual, is what the number actually is now. So if you look at the previous, 4.92, and now it's 5.62. So that's a massive positive, right? And you can see there's no minus sign here. You know, sometimes you get a minus like this one here. There's no minus here. So what does that mean? That means it's, what's the fucking term for it? You get a deficit, a surplus. It means it's a surplus, right? So you get a deficit and a surplus. This is a surplus. So how do you get deficits and how do you get surpluses? It's very, very simple. If you look at the one, it says good trades balance. Some of them, different countries have different names. Like this one says good trades balance. Some other countries just call it trade balance, right? But it's all the same thing. Different countries call it different things. So when you're here, all the trade balance is, right? When it's a positive, all that simply means is that country is exporting more than it is importing, i.e. it's selling more shit and making more money than it's importing. If it was importing more than it was exporting, that means it's buying more shit than it's selling. So if you're buying more stuff and you're selling, what's going to happen? Your fucking wallet's going to get emptier, right? And that's where you end up with a deficit. You end up with a negative trade. So it'll be like minus 5 billion, you know, and that's not fucking good. So if it ends up here with a surplus, all that simply means is your country is exporting more, i.e. selling more stuff, i.e. making more fucking money than it's importing, which is fantastic for the economy. All right. USD trade balance, trade balance. Okay, so that's also good. Let's have a look. Next week, what have we got? Next week we get PPI, fantastic. Not much big news for next week. Manufacturing, yeah, it's fine. I mean, it's not a manufacturing country anyway, so it's not really going to have a big impact. Oh, this is already out. Sorry, CPI, PPI. Okay, not very good. Not very good. And it's year on year, so that's good to see that because they're not good numbers at all. Let's go back. So yeah, I am gonna keep AUD in neutral, guys, and I am going to keep NZD in weak. No change, you know. And like I always say in the videos, you don't just change things week to week. You will have, you know, an overall thing which you're based on. Okay, what's this economy looking like over the next 3, 6, 9, 12 months, right? And then you have, like, that's called the macro, and then you have the micro, right? It's very similar to if you're on the actual trading chart and you have the weekly time frame, the monthly time frame, the daily time frame. They're all macro, right? The bigger picture. And then you have the micro, the 5 minute, the 15 minute, and so on and so forth. Okay, it's exactly the same. Market cycles work exactly the same way as that on the charts. Okay, so overall, I'm keeping NZD at weak. AUD is still neutral because it's kind of neither here nor there. Now, you may, obviously, you have to understand where I'm coming from with this. If you look on the charts, you know, this Monday, Tuesday, Wednesday, and you start seeing AUD showing strength, you'll be like, oh, this guy said it was neutral. Why is it going strong? Yeah, it's just fucking normal market movement, you know? We're not talking about this is going to be weak or strong or neutral in the actual market, because markets have to move, you know? But overall, you get the overall health of the economy, and it's just not a very strong pair right now. It's more to the negative side than it is to the positive side, okay? But if you look at some of the pairs, you will see that they are, like AUD USD, that might look as if AUD is strong right now. It's just normal market pullbacks. It's big institutions taking profit and so on and so forth. But in the grand scheme of things, the AUD economy is nowhere fucking near as strong and robust as the USD, okay? It may not look like that when you just look on your charts, and that's why you can't just go on technical analysis, because then you won't understand the whole big picture and why the charts are moving. All it is profit taking, retracements, pullbacks, because banks would rather die than buy something where there's no value. They need to get net value. And a thing that I would say is, look, let's say you live in Glasgow, right? You drive through to Edinburgh one day because you're a fucking electrician, and you're through in Edinburgh one day and you see an Audi TT for 10 grand, and you think, oh fucking hell, that's nice, I might get that. You then go back to Glasgow and you start thinking about it, think, fuck, I might go and buy that car, you know, I really like it. And then you go, fuck, I can't be arsed going to Edinburgh, you know, driving for an hour, fucking around. Then I'm going to have to go back in a week's time and do the paperwork. I can't be arsed. Let's see if there's, you know, someone selling an Audi TT closer to me. You look on, you type in the mileage, same as the last one, same colour, interior, blah, 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 and you have a look and you see if there's any fucking Audi TT in Glasgow. And you see one, and it's 14,700. Are you going to leave your house, say, fuck it, it saves me an hour's drive, you know, twice this week, I'm just going to pay the extra 4,700, so I'm going to pay the 14, nearly 15 grand for a car? Or are you going to say, fuck that, I'm going to go through to Edinburgh, I'm just going to take that, I'm going to drive to fucking Edinburgh, and I'm going to buy the car at 10 grand, because it's better fucking value? You're going to drive to Edinburgh. You're instantly going to say, you know, I don't give a shit about the hour's drive, now I'm going to go there. Why? Because it's better value. It's no different from the banks. They don't want to buy anything where there's just simply no value to it. Everything is about value in the markets, right? And all these movements you see, it's not markets crashing, it's not this, it's not that. They're just retracements. It's profit taking, it's market manipulation, and so on and so forth. All right, that's all it is. It's all perfectly normal. Now, moving on, we will speed this up now, because we've now done the worst part, which is doing all three together, and now we can be pretty rapid because we're doing them individually. All right. So, Canada. I mean, Canada's definitely not the best at the moment. Not the worst, but not the best. I mean, look, manufacturing PMI, massive fucking drop there, so that's dog shit. That's probably an effect from Trump's tariffs, because things are getting too expensive. So, you know, tons of people will have dropped their orders because it would just be far too expensive to place manufacturing orders with Canada at present. And you can see all this crazy movement within the market, all right. Labour productivity, that's good. 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 Unemployment change. Oh, sorry, employment change. That's not good. Again, that would be too expensive to have employees, you know, keep employees running because all the fucking tariffs and stuff are up. So tons of people may have potentially lost their jobs. Stuff like unemployment rate, it's quite steady actually. Capacity utilization rate, So for me, Canadian dollar is still neutral, right? Again, no change, and markets are pretty shit right now. So it's called stagflation, right? You have periods of the market inflation, periods of deflation. So inflation is of course bull markets, deflation is of course bear markets, and you just get periods like this. It can go on for fucking months, right? Where you get periods of stagflation. Markets are just stagnant, just ding 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 ding, just big ranges even on the higher time frames, and it's perfectly normal. It's shit, especially if you're a trader like me and you just trade the higher time frames, and you really need to wait for the market to hit your zones. But patience is fucking key. We're not here to trade. We are here to make money, right? Next week, what have we got? BLC rate. Yeah, nothing. There's nothing really next week. Okay, so I'm just gonna move on. So I've got CAD still marked down as neutral. I don't know why I even bother checking CHF. It's always fucking neutral. CHF is, yeah, look, even that shit, but it's always neutral for me because it's what makes CHF tradable is actually the market sentiment. Okay, so you have a thing called a risk on sentiment and a risk off sentiment, and that's really what makes CHF tradable. I won't cover that because that's a whole fucking lesson on its own, right? So I'm not going to cover that today, but that's why it is, and I've kept it in neutral. I pretty much always have it in neutral. Okay, so let's fly through euro. I mean, look at this. I will come back. I'll fly through it, and then I'll come back and we'll discuss certain aspects, right? Bearish, 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 bearish. Don't be fooled that that's green. Okay, look. It was previously 2.5. It was forecast to drop to 2.3, and it came in better than forecasted. However, it's still less than before, so that's bearish. That's not good news, all right? Don't get caught out with that. Spanish unemployment. Yeah, we don't really care about Spain and Italy because they're shit. All we really care about is France and Germany because they're the ones who really have the power to shift the markets for the Eurozone, okay, with a sheer size. Unemployment rate is pretty steady, hasn't changed. Bullish, but again it's Spain. Bullish, bearish, bullish, 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 bearish, 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 bearish. Yeah, same, stagnant. So again for me, I'm keeping euro at weak. I mean, there could be an argument. Remember, these are just my opinions. You might get some people out there say, "Oh, euros, neutral." There's nothing wrong with saying that, right? Just remember, everyone has an opinion, and this is why I like to teach you guys it, because you guys might not think euros weak. You guys might be like, "Well, fucking hell, when I go through this, Ryan, it appears more neutral to me," and that's absolutely fine. This is why I like to teach you it, so you can understand it, and you can go away and you can decide for yourself. All right, so you don't have to. You don't have to take my opinion on it. German industrial production. What have we got? German trade balance. Quarterly. Okay, we've got CPI next week, but I mean, look, they're month on month, right? So they're pretty shit. Yeah, there's not much happening next week. So for me, euro is. I'm keeping it in week. Pound. Bearish. Bullish, but it's month on month, so it's not really a bigger picture. Bearish. Bullish. So why is net lending to individuals seen as bullish if it's increased? It's very fucking simple. If net lending has increased to individuals, that means the bank are giving people more loans. When people are applying for loans, the bank are approving more loans. If the bank gives people more money, what do you do with it? You're gonna buy more shit, right? You're gonna go and buy a fucking 2-litre Corsa. You are gonna go on holiday. You're gonna do loads of shit with that. And that's exactly why it then becomes good, because when they give you the bank loan, you then spend it on shit. You then stimulate the economy when you're spending it, and that's how the world rotates. Final services PMI 51. So even though that's less, it's still bullish, right? Bearish and bearish. So again, for me, I'm keeping pound in neutral. Now, look, if you look at GBP USD right now, where are we? There it is. Look, see these zones? Small candle, large engulfing, comes back for the retest. Boom, away it goes. However, I am not taking this buy. Why? Because I do not counter trend trade. I just don't do it. It's part of my rules. However, when I marked this up fucking, a month ago or even longer, I did say to you, if it comes here and you wish to buy it and you're someone who you're perfectly happy to take counter trend trades, you can absolutely trade this. And look at it. Look, picture fucking perfect again. Now I'm just waiting for it to come up here. I'd love to see it retest this zone. I would absolutely love to see it retest this zone, sorry. And then I'll enter the sell. Stop loss will be above here and fucking melt all the way down. That's potentially what I'm looking for. But again, you have to wait and see what the fundamentals are like once it gets to those levels, okay? Next week. Come on. What we got? Yeah, there's not GDP month for month. So there's nothing. Next week doesn't appear to be a very big news week, okay? So I'm keeping pound in neutral. If you want to put it as weak, you can crack on. But don't let that feel like, well, it's fucking clearly strong, isn't it? No, it's not. It's fucking weak. The data tells you it's weak. But every single market has pullbacks. Every single market has huge players doing profit taking. They take the profits and it makes these huge market moves, which then brings the market back up to areas of value, and then the real move will come into play. By real move, I mean the trend. Trend is your friend. You've always heard of that, right? It's the real trend move. When I say it's not the real move, I'm simply referring to counter trend trades. Okay, you can take counter trend trades. Nothing wrong with it. It's just for my strategy, I just don't do it because over time, all the trades have always came back to fucking bite me in the arse. It's always been more often than not counter trend trades. So I just like, it's not fucking worth it. I would just rather wait and select the best fucking trades. Doesn't mean all your trend trades are going to come in. Of course you're going to have losing trades. That's perfectly normal, but you're trying to increase your probability of success, right? You want to choose the trades which have a higher probability of giving you a yield, a return on your investment, i.e. make you fucking money, with the lowest probability of risk, which is a trend trade in line with fundamentals, areas of value, blah blah blah. If you choose to trade a counter trend trade, what you're actually doing is you're saying, I'm taking a trade here which has the lowest probability of making me fucking money and the highest probability of risk of biting me in the arse. So I just look at that and say, well, why the fuck would I take that? If you want to take it, you crack on. That's what trading is all about. I'm not here to tell you what to do and what not to do. I'm just here to simply give you the education, and then you go away, you practice stuff, and then you decide what type of trader you are. All right, because everybody's different. When I was trading for the company here over in the city in Jakarta, the chief trader that first taught me how to trade, I can tell you right now in my life, I do not trade anything fucking like him whatsoever. However, he taught me everything, to get me in the game, which I'm very grateful for. But I don't trade anything like him right now, not even remotely the same. And that would be the same with you. If you're picking up stuff from me, blah, 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 you might just pick a little bit up from here. Oh, I like that, what Ryan does. Oh, but I like this, what Roger Banks does. Oh, I like this, what fucking, Alex G, or whatever the fuck his name is, does. I like this, what Q Banks does. You're gonna make this own little jigsaw puzzle of yourself, and you pick up these little pieces from all different people. And if that works for you, happy fucking days, right? Because that's what the game's all about. Financial manufacturing, PMI, bearish. Unemployed, that's bearish. Getting slightly better, but obviously still shit. Bearish. Yeah, shit, we don't care. So yeah, a Japanese yen, whether they have it, I had it as neutral, and I'm still going to keep it neutral. Excuse me, as I say, we don't just chop and change, right? We need to see consistent data over a long period of time. Average character. So next month we've got fuck's sake. This week we have got pretty decent news that we want to see. Nothing too major, but yeah, GDP final index, yeah, that's fine. Current account, we like to see that. Economic watcher sentiment, average cash earnings. So why do we care about average cash earnings? And look, some of these are yellow folders, right? You don't just focus on red and orange, you focus on the main ones. If you got my cheat sheet that I made up, you'll see that there. What was I going to say? So average cash earnings, again, like I always say, it's fucking common sense, lads. average cash earnings is how much are people earning when they go to work, right? So if this comes in, previously it was 4.4, right? If the actual comes in and it's like 4.5, 4.6, 4.7, whatever, that's fucking fantastic. Why? Because it means that not more people, it means that people are earning more money. When you earn more money at your job, what do? Do you save that money or do you buy better shit? You fucking buy better shit. You're like, oh, I was gonna get a Whoop fucking watch or whatever. Oh, I'm gonna go and buy that now next week because I've made more money than I expected, and you just buy tons of shit with it. When you buy tons of shit, what does that do? It stimulates the economy. It then brings growth, right? Which is positive for an economy, and that's how it goes. Obviously, if it's negative, it means if that goes from 4.4 and let's say it even jumps down to 3.2 or 2.9 or something, then that's bad for the economy. Why? Because it means people are earning less money at their jobs. When people are earning less money month on month, what do you fucking do? You say to the missus, oh, I think we're going to have to cancel Sky TV because we fucking can't afford the bills every month. So you cancel your fucking Sky TV. Then you stop eating takeaways. You stop going out to restaurants and bars because you're like, yeah, I need to fucking watch my money, Electricity and gas bills are going up, so you're like, fuck, you're in a really hard place. So you stop spending, which then does not stimulate the economy, which is then negative for the country as a whole. When it's negative for the country, i.e. the economy, that then means that the currency is then affected in a negative way. All right, it's really fucking dead simple when you break it down, and you just use baby logic. That's all it is. It's really logical. Bank lending year on year, want to see that? So bank lending is up, fantastic. And this is actually what the Bank of Japan have been doing. When you got these really good numbers and stuff in November, December, January, it's like, fucking hell, Japan's really picking up. It was a kind of false growth because they actually said what they're going to do is they were going to pump, fucking billions of dollars into the Japanese economy in forms of loans. So they were just going to give people fuck tons of loans to pull themselves out of this, fucking really shit place that they were in for the economy. And it worked. It really, really fucking worked. They increased people's wages, they gave out bank loans, and all these things worked because people were able to earn more money at their job and be able to borrow more money. They were buying tons of shit, which gave you this growth. So it's these little tricks that governments use, right, to stimulate economies and either get them to grow or get them to shrink. Because sometimes you want them to shrink depending on the situation that a country's in, so that you can then buy up more stuff and blah blah blah. Right? I won't get into that, but there's different tricks. It's like what Trump's doing right now. Everyone's like, oh my god, this is a fucking disaster, markets are crashing because of Trump. It's not. It's all very intelligently fucking calculated. He knows exactly what he's doing, the cunt. He's very smart, very, very smart. Household spending. So if household spending is up, it's the same again what I just explained here, guys. It means people are spending more money per household, right? That's it. Final GDP, yeah, I want to see that. Okay, so for me, Japanese yen is neutral. I think it's going to be the same as last week. NZD we have done. And let's go back. Last week was NFP week. So I'm going to fly through this and then we can talk about, I can discuss certain ones. So, bullish. But look, it went from 50.9 to 50.3. That's fucking bullish. It just means things have slightly slowed down, right? And if you look at the sector, it's the ISM manufacturing, which will be to do with tariffs and blah, blah, blah. Okay, but anyway, bullish. Bearish. Oh, we don't care. Bearish. Non-farm payroll. Let me think. Employment change. Bearish. Bullish. Unemployment claims. Bullish. Bearish. Unit costs. Revised unit labour costs quarter on quarter is down. Oh, we don't really care about that. Trade balance. Bearish. Month bearish. We don't care about natural gas. Non-farm employment is non-farm employment change. That is bullish. Do not be fooled by. I nearly got tricked. That's why I said it. Don't be fooled that it's fucking red. Okay. Previously, employment non-farm employment change was 125. Now it's 151. employment has increased, right? So that's a fucking good thing. Well, that's non-farm employment, okay? That's increased, so that is a good thing. Why is it red? Because it was forecast to come in at 159, and it's came in at 151. So because it came in less than forecast, it looks like it's painted red, so it looks negative, i.e. bearish. That's not fucking bearish. That is bullish. That's a great fucking number. Okay? Again, unemployment rate is slightly increased, so that's obviously bearish. So what you'll find there is that it's all very mixed data. You know, it's not strong, it's not weak. You've got equally amount of positive data here, i.e. bullish, as you have negative, i.e. bearish. Okay, so it's this, when you get in these scenarios, it's simply mixed data. Okay, that's all it is. Next month, fuck's sake, I've done it again. This week, we've got loads of news this week, so this could be a potentially spicy week for USD, and you probably see gold as well. Okay, so yeah, pretty much a spicy week coming up, which should be lovely. Nice amount of volatility, which we can hopefully monetize. All right, so let's wait and see. For me, USD is still strong. Yes, it's gone through this little weak stage, you know, in the market moves, but it's not weakness, right? It's still a fucking powerhouse. So you need to think about the bigger picture. Be like, well, it's showing weakness now. Yes, but that's in the micro. That's in the here and now. We don't care about the here and now. We're planning for the next fucking what's the big picture here, right? And that's what we're aiming for. So for me, USD is still strong. Okay. That's pretty much it, guys. I also use this as well for data. Oh shit, you can't see it because of my screen. Sorry. Next time I'll do a full screen so you can see it. You see this here? Look, USD, bullish, Euro, bearish, right? Next time I'll do full screen so you can see that. My bad. The reason why I chopped it is so that you can actually see it, because I know a lot of guys watch this from their laptop or maybe a small computer screen, and I've got like one of these meter long single screens. So if I do it full screen and you're watching it on a laptop, sometimes it can look pretty shit and you're like, man, I can't see what the fuck he's pointing at here, you know? So that was why I cropped it, and I kind of made the screen a smaller size to make the quality better for you guys. Alright, but anyway, look, to summarise, it's the same as last week, guys. USD, economy strong, weak, NZD and Euro, neutral, AUD, CAD, CHF, GBP and Japanese Yen. Okay, let's see what we've got coming up next week. Remember, if you are trading, just wait. You do not need to be taking trades here, there, and every fucking where. Okay, you don't get. You're not in this game to take trades. You're in the game to make money, right? When markets are choppy and bullshitty, just fucking wait. If you're a scalper, a day trader, whatever, crack on. You do your thing. You know, I'm talking about the bigger picture where I can very easily sit here for fucking 8, 9, 10, 12 weeks and not take a single fucking trade if markets are shit. However, on the flip side of that, as you know, if you're in the Discord group, I can very comfortably enter a trade and just fucking leave it for weeks. And we caught copper 2 weeks ago. It was a fucking lovely trade. Any of the guys in the group will tell you it was a beautiful trade. It was completely fucking stress-free, and you just let the trade go. You know, completely stress-free trade. And we done very well on it. I think they ended caught like 31,000 points, which is like 3,100 pips. Now, let's say you're a day trader. That was the first trade I've taken this year, right? One trade, 3,100 pips, and that was I only caught the second entry. If I had caught the first entry point, I missed it because it happened when I was, you know, during the night for me. So that, of course I'm going to miss it because I'm in bed. If I caught the first one, that would have been like 8,200 pips on that one trade, right? So, and I don't want to give you a shoulda, woulda, coulda, but let's just look at 3,100 fucking pips in the space of like, fucking hell, it was about a week. It was less than a week, right? I had planned to hold it for 2 weeks, but it already hit fucking TP1 and it started pulling back. So I thought, all right, it's fucking rejecting on the 6-1 fib. You don't want to let your winning trade go all the way back down to fucking zero, right? Because you can always re-enter again later. So I closed it out there and made some fucking great profit. When I used to do day trading and jumping in an hour here, an hour there, blah, 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 I'm telling you right now, if I had taken a ton of trades from December up until last week, all of the winning trades that I had, I fucking guarantee you, the pips would not have added up to 3,100 fucking pips. I'll tell you right now, they would not have done that, you know? And this is the power of being a sniper and picking out these AAA trades and the difference between being a machine gunner and fucking dum dum dum. You feel good. You get that instant gratification that you're doing more. But remember, just because you're doing more does not mean that you are being more productive. You can be doing more of a load of shit. It doesn't mean you're being more productive, right? So I've learned over the years, it's better for me. I'm not saying you have to copy it. This is just what I do. I would just wait in the fucking grass with my ghillie suit on, sniper fucking rifle, and wait for the best trades. Alright, guys. So, look, have a great week trading. Be careful, especially trading USD pairs, because this is going to be a little bit of a spicy week. Be mindful of the shit Trump can say. That has an effect on the markets. Don't over risk. Don't over trade. Follow your fucking rules, and have a good week. See you soon.